doing? I hope you're doing well. Welcome back to my channel. And if you're new here, in this space we talk about forex related stuff, the mistake I keep making every day so that I can share with you. And in today's video, by the way, if you find this video very interesting, kindly hit that subscribe button. It really helps me a lot. That is the only way you can motivate me to keep on making these videos for you. So in today's video, I want us to look at a specific pair, and this is the GBPUSD, because the moment you know the direction of the pound or the USD, the Euro USD, the Audi USD, at least you have a chance of trading the market. And now, even before we start looking at this pair, you have to understand how the market works, okay? Because in the market, at least you must know, you have to understand before even you do anything in the market, you must know where the trend is heading, the structure. Let me write for you. You must understand when you are analyzing the market, when you are doing the top down analysis, top down USD. Sometimes back you can just go and watch that video so that you can understand the uh, top down. You have to do the top down analysis so that you know where the market is heading to. And when you are doing this top down analysis, the first thing that you have to know, the trend. The trend will always be your friend, followed by the market structure. As long as you know where the market is heading, the market structure, when you're writing and you're talking at the same time, can be a bit confusing, so bear with me. The market structure, and from there then you have to find your area of interest, your point of interest. It depends with there you want to pronounce it. From there then you find the entry. You don't start with the entry should always be the last thing that you do in the market. Entry should always be your last thing to find in the market. And when we come to the trend, of course, the market, it will always do two things. Before I tell you my thought on the USD, the market will always do two things. When we have this type of a market, we call it an uptrend market, because we have high highs and high lows. Okay, we have the high and high low, and it is impossible for you to have a high without a high low. Okay, when you have this type of a market, the market keeps on breaking toward the downside, then we have a downtrend market, because we have a lower high and lower low, lower high and lower low. If you have this type of a market, you can have this type of a market uh, is buying or selling. Let me show you something. If you have this type of a market, how will you say this market uh, is where will you say this market is heading towards to? Because here the market is bullish, then we have this point, the market comes down, it does not violate this last point. Let me put this drawing here. You see this point here, the market does not violate this point, so this market is creating high and high low. And the moment this market again it comes here, don't mind the noise, you know it is now during the holiday, we have kids, so you have to understand. Okay, so when this market here it comes and breaks here, this is why we have a new high, and from where the market was, you just have to go backward and see where the last top the market was before it started this huge movement, and then you'll find this is our new lower high low, and this is our new high. So this is our new high, because the market has already broken this zone, so this should be our new high, and our current high low, it should be this one, because remember the market has already broken this zone. Let me put a line here so that you can understand. The market has already broken this zone, so that is why we have a new high. And what happens if this market now comes here? What do you think happens if this market is high and this is our high low. What happens when the market is here? This is just but a structure, because the last structure that you want to see the market breaking, it should be this one. So anything in between, unless the market breaks down or up, anything in between, it should be none of our business. Okay, anything in between should be none of our business. So this is just but a structure inside the structure, like it is just a structure inside here. So we don't pay that so much attention to this area, because the market has not yet violated. But the moment now the sellers come in and they break here, the market automatically shift. So it shift from being a high and high low to lower low and lower high, because the market has already shifted. Can you see how this market is now shifting? Here you are saying we have high and high low, and in between the market had not yet broken this last zone that was here. That is why we are just saying it is a structure inside a structure. And the moment now the sellers come in and they break this structure, our last structure here, the sellers coming in and they break this structure, now this is our new this one becomes our new lower low, and this one where the market is, it becomes a new lower high. Okay, and the moment again the buyers come in and they break this structure, now we call it this one a high, because it has already broken, and where the market last was, it now becomes our new lower high, because we have a new lower low and lower high. Now the market, if it keeps on breaking this zone, then we continue as long as the market keeps on breaking. Remember, let me write for you here. Remember, anytime you come into the market, as long as you are in the market, for you to have a bullish market, for you to have a bullish, put this point, for you to have a bullish market, there must be high and high low, and high low. Anytime you want to have a bullish market, we must have a high and high low. For you to have a bearish market or a market that is going downward, then we must have a lower high and lower low. Or you can just try lower low and lower high. You can just have lower uh, lower low, lower low, and lower high. Lower high. So there's no way you can have a lower high without a lower low. The market has to break before even you start saying now we have a new high. The market has to break before you bring our you say we have a new high low, the market has to break. If this market does not break this zone here, then this is just a structure, because the market can easily come here and do what? Instead of breaking, when you're expecting the market to break up, it comes down. So the market has to break either side for you to say we have a new high and high low. So I really hope that we are clear from there. And from there, then if you have already known where the trend is heading, and you already have the market structure, then you must have your point of interest. When you come to the point of interest, a good point of interest, it is an interest where the market has been tapping more than 3, 4, or even 5 times. The better, the more taps, the better. Okay, if the market has been in that area for maybe for 3 or 4 or 5 times, it means it is the area is even stronger. Let's say this area, the market has been tapping. Whenever the buyers come to this zone, they push the market up. Then it means this area, it is quite a strong area, and in this case, this one you can call it a strong area of support. If it was on a upside, then we call it a resistance. A resistance, and I keep saying it is an area where whenever the buyers come into the market, they are forced to they are forced, and they push the market down. If you have the resistance, then it means whenever the buyers try to push this market up, they are pushed down. Okay, let me try to make it into a diagram, but I'll do again another video so that you can try to understand. You see how many touches we have here? We have how many touches? We have the first one, then we have this one, the second one. So the more the touches, the better for us, because it means that area is very strong for the buyers to break that area. And that is why whenever we have that area, it simply means it is easily for us to buy the market or to sell the market. And when you come to the downside, if we have this same area here, then it means the buyers are strong since the sellers are waiting for us here. Then it simply means the sellers are very strong and they are waiting for us here. If it is hard, you can just invert your scale and you will see the same thing will happen whenever you come and say we have support and resistance. It is still the same thing if you just invert the scale. Okay, can you see it is the same thing? But I want to tell you that when you come to the market, now when you come to your point of interest, you have to consider support and resistance. That is one of the easiest topic, but I'll not go into detail. Just know when you hear the term support, it simply means support, an area. It is an area. It is not a specific point. It is an area where whenever the sellers try to push the market beyond that, the buyers, they are always waiting to push the market toward the upside. And when you hear the term resistance, it is an area again. Resistance, it is an area again. Whenever the buyers push the market up, the sellers, they are waiting to push the market even further down. Do you see how they work together? And remember, the same support or resistance, it can now become a support or resistance. Let me use the same in case of support. This same support where we are waiting the sellers to push this market down, so that the buyers here, they are waiting for the market to push up. If the buyers, they come and break, they have said if the structure has already been broken, do you see now this area that was once our support, it now becomes our resistance, because the sellers, they are powerful, showing us that they are willing to push this market down. So you can have this support, but the moment the sellers break this support here, it now becomes our resistance. And whenever the sellers try to push this market, the buyers try to push this market up, the sellers will always be pushing the market down. And now that is how it is easy. The moment you understand, as long as you have to buy, then you'll have to sell at some point, because the market, it will never go on a straight line. That is why we are saying the market will never that is why we are saying we have a bullish market and a bearish market. You see, if I was to analyze, for example, this market, if at one point this market was going upward and all of a sudden it started to go down, if this was our support and resistance, it simply means whenever the buyers came here, the sellers were so powerful and they pushed the market downward. Now coming into our analysis on the GBPUSD from the weekly, I've already done all the work for you. You just have to go and watch the market on what is happening, so that probably we can be on the same page, so that you can understand what I'm trying to say. From the look of this market, what do you think is happening to this market? Let me remove this thing so that the chart can be quite clean. I want a clean chart. When you have a clean chart, it is easy for you not to get confused. Look at this market of the GBPUSD. You have to also go to your chart and look, like you have to analyze. You know, this thing, it is live, like it is always happening every day. So you have to keep up with the market. From the look of this chart, what do you think is happening to this market? Starting from the weekly, you can see the market has been going upward. From here, you can see how the market has been breaking these zones, creating high and high low. Can you see how this market has been creating high and high low? And all of a sudden, our markets come down and it breaks our zone. What have I said about the market breaking our zone? When we have this market breaking our zone, it simply means it has already broken the last structure. So we cannot say this market is creating high and high low. Why? Because it has already broken the last uh, the last high low, now we have a new lower low, and this one automatically shift to becoming a lower high because this is a lower low, but the market is still ongoing. This candle has not yet closed, so it is a weekly market. Sometimes if it is hard for you to analyze using the candle, you can use the line chart. I did a whole video about the line chart. You can always go and use the line chart so that at least you can clearly see what is happening to the market. Now you can see the market has already broken the structure. So we don't have a high, we have a new lower low, this one becoming our new lower high. And why do I have this line? I have this line because it is our point of interest. But even before we go to the point of interest, let us go to daily so that we know what is happening to the market. Now that we already know that weekly we are bearish because the market has already broken the structure. For now, the market we know we have been buying for quite some time, but now the structure as of this market, we are selling the market because the sellers are very strong and they have already broken the last structure, and the candle is still ongoing. It has not yet closed. Remaining a day for the market to close. Coming to the daily time frame, that is how you analyze the market every day. Like, but you have to do it on the weekly. Okay. Coming to the daily, again, you can find it confusing. Again, I said when you come to daily, it is the same thing as the weekly, only that in the daily we have a lot of detail, like we are just zooming in. I keep on saying this thing a lot. Coming again to the line chart, you can clearly see it is the same structure, and now you can now clearly see the market is going down and because it keeps on breaking the structure. So we have two time frame that they're saying, oh, we should be selling. So do you think you should be buying if you have already two time frame that they're telling you sell the market, don't buy the market as of this market, as of this time? When you go again to 4 hour, because we use the weekly, 4 hour and daily to know the direction of the market, then the lower time frame, the 1 hour 30 minutes, you have to enter the market. Coming to the 4 hour, let's see what the market is saying on the 4 hour. Use the line chart because it is quite easier. Sometimes the candle they can be confusing, so just use the line chart and it is quite easy. Now can you see, even when you go to even to the 4 hour, we have a lot even details, like there is a lot, but at the end of the day you can see this market, what it is doing, it is heading toward the downside. So it is quite easier for us to sell the market than buy the market. And now when we come to our point of interest, we've said we want to see a point of interest that has been touched more than 3-4 times. The more times it has been touched, the better for us. Now you can see this market, it has been touched for quite some time, so it is quite a strong area for us. My Wi-Fi is a bit slow. It has been touched for quite some time, so it is quite easier for us to relate with this area. Just a moment. Sorry for that. My net is quite slow. Oh, I do it. Sometimes the net. Oh my goodness. I hope we are back now. So when you come to this area, you can see, although this is not as this area, it has been touched for more than 3 times, 1, 2, 3, and the backward minute is quite slow. But anyway, so at least we have this area showing us the whenever the buyers are above this line, we are buying the market, and whenever the sellers are down here, then we should be selling the market. So my thinking, because you can see this big candle here, so if I'm to sell this market, I'll wait for a retracement, then I can enter this market and push this market toward the downside. And for me to enter, I cannot enter with this one because of the stop loss. So you'll have to wait for the lower time frame for the market to retrace so that you can at least enter the market. And again, other confluence that you have to use from the daily, again, you can see we have a structure that we have a pattern that looks like a head and shoulder. So for me, if I'm to sell, I'll wait for the market to retest, then I can continue selling the market. If the buyers break here, then I'll have to wait for the retest, then I can buy for the market. So just go and look at GBPUSD and hope that we'll find a good entry and let's see what will happen at the end of the day. So thank you so much for watching today's video. Until next time, bye bye.